This is a tutorial on the Residential Income Purchase Agreement, CAR Form RIPA. And we'll go through it line by line. We'll start at the very top here because there are all these disclosures and advisories crammed in the front. This form's basically a bundle. So we'll start with the disclosure regarding real estate agency relationship. Pretty simple. It's a two-page form. Your client, the buyer, is going to sign here. You're going to put your brokerage name, and then you're going to sign. Nothing on the second page. Fair housing and discrimination advisory. Two-page form. Buyer's going to sign. We move on. Possible representation of more than one buyer or seller. Your client's going to sign. You're going to name the brokerages, and you're going to sign as the agent for the buyer. Wire fraud advisory. Buyer's going to sign. And finally, we arrive at page 1 of the purchase agreement. Now, this form changed to match this grid matrix format that the normal RPA is on. And quite frankly, this form is basically the same thing as the RPA. There are just a couple different provisions in here because it's understood that this is for an investment property or an income property. But in theory, you could write an offer on multifamily or investment properties with the normal RPA. You just want to make sure that you attach or incorporate other forms like a tenant estoppel, for example, or something related to the property that you're buying. But this form's more appropriate, but even if you use the normal RPA, you should be fine. So we'll jump right into it. We start by putting the date that we prepared this form up here on the top left. The buyer's name here. Check the box that shows what type of buyer this is. I just put a person, which is an individual. If it's an entity, you'll want to do a representative capacity signature disclosure, RCSD form, which basically says that, so if you put a name like 123 Investments, LLC or Inc. or something, then that's the name of the buyer. But there's going to be an individual that signs. So Bob Buyer might sign for that investment company. You'll put the investment company as the buyer, but on that other form, the RCSD, you need to put Bob Buyer to show that he's the authorized signatory for that company. All right, the property address right there, street address, city, county, zip code, parcel number, which can be found on the property tax bill. It can be found on the MLS. You can do a search in Realist. You can do a search on the county assessor's site. You can ask the seller. And if all those fail, you can just leave it blank, but it's good to come back and put it in here. I've heard legends of properties, this is years ago, of a property that sold because the address was so similar to another one on the same street or something, and they didn't put the AP in. I mean, it could just have been something that they told us in training to make us nervous, but it's always good to have that APN number as a secondary way to identify the property in addition to the street address. All right, then we have the confirmation of agency relationships. You'll put the seller's brokerage license number, listing agent license number, the buyer's brokerage, also known as the selling brokerage here, selling brokerage number, and then the selling agent, also known as the buyer's agent here, and then the buyer's agent's number here, and then we move on. Of course, you'll check these boxes below each line. If it's dual agent, you'll check dual agent as well. And we jump right down here. Now, the way this form is structured, again, is very similar to how the RPA is done. And what that basically means is that you have this grid up top here. And the grid has these line items that help you identify A, B, C. So you can refer back to this line letter, but also it references this paragraph because basically all the important terms in this agreement have been extracted and put up front into this grid-like format. But these are just distilled terms that appear in this ocean of text down here. So that's why when you see just paragraphs of text making you sleepy and you see that there is this number in front of it, all that ties in as basically the full explanation or the full provision of each of these lines. So you can see how this letter corresponds to this particular paragraph. So we'll go through this and then we'll skim through the text. But it's handy because you can see what's being modified up here. These are kind of the modifiers where there's a number of days allotted or a numerical figure like a purchase price or close of escrow period. And then you can see the full explanation of terms. And it's very handy if something goes wrong in the offer, because if you feel the other party is violating a provision, like a provision, let's say in section L right here, well, guess what? You have all of paragraph 8 that goes into further detail. All right, so we'll jump right into it. Purchase price, $1 million. If it's all cash, check this box. Close of escrow, and these of course are just arbitrary numbers. I just made them up for a sake of example. Close of escrow, 30 days after acceptance. Might be a little bit aggressive on an investment property. Maybe you'll need more time because you'll need to look at the tenant estoppel. You'll need to look at the records of tenants, or maybe the P&L from the investment property or the property management company. But I just put 30 days, which will still work just fine. Or you can put a definitive calendar date for close of escrow. Expiration of offer. So if nothing's done, by default, 3 calendar days go by, this offer expires. And you can shorten or lengthen that down here. Initial deposit amount, between 1% and 3% typically. I just put in 3% because I was feeling generous, so I put $30,000. Within 3 business days, needs to be deposited at escrow. And by default, it's by wire. If you wanted to say check, you could write personal check. You check this box, write personal check. But this is $30,000 being delivered to escrow within 3 business days. Increased deposit, this is very rarely used. If for whatever reason you need to add more to this number to sweeten the deal for whatever reason, you can use this section here. But again, this is very rarely used. Loan amount, we're going to finance this with 80%. And actually, technically speaking, most loans on investment properties now, you need 25% down. But I just wrote in 80%, 800,000, just to make it an easy number. I left the rate blank. Technically, you should write a rate in there. Technically, you want to fill it in as much as possible. But a lot of times the agents don't, and that's fine too. It's not going to adversely affect the deal. And then you'll check if it's not conventional financing. You'll check one of these boxes. Conventional by default, unless you check one of these boxes. Additional financed amount. Now, what if the seller is going to do a carryback, or you're getting private financing? You'd put it down here in addition to this up here. Occupancy, investment by default. And if you want to check primary, secondary, maybe your lender's requiring that you live there because it might be a commercial property where you rent out something below but you live above. In any case, you'll check the appropriate box here. Automatically, the balance of the purchase price is calculated here. Keep in mind, this number is just the down payment minus the EMD, earnest money deposit, which is already at escrow. So it's the earnest money deposit plus the balance of the down payment equals the total purchase price. The buyer initials, and we move on. Is the seller going to credit the buyer any money? That's where you'll indicate so. And it should be less than the amount of closing costs, because if you credit more than what the closing costs are, if the seller credits more than what the buyer's closing costs are, that money gets lost. That money, it's not like the difference is refunded to the buyer at closing in the form of a check or something. That money is not used. So you want to be very careful there. Any additional financing terms, write them in here. Your offer should include a proof of funds that shows the down payment, and if it's all cash, all the cash needed. And if it's a mortgage offer, it should include a pre-approval letter from the lender. Now, if not, then you can check this box that within 3 days after acceptance, you'll deliver it, but it really should be included with the offer. Final verification of condition, also known as the final walkthrough, to happen 5 or, and you can change it, days prior to escrow. Assignment request. Is this contract going to be assigned? Probably not, because usually they're not. If it is, if there's going to be an assignment, then this can be modified here, but if not, just skip it. Again, it's rare that people are signing contracts unless it's some sort of wholesaler or investment arrangement. All right. Contingencies in this section L. 17 days for loan or no loan contingency. Check that if it's a cash offer. Appraisal, 17 days, or check it if there's no appraisal involved. Don't waive this if you have a loan. Sometimes people do, but it's crazy. And if you need more time, you can write it in right here. Investigation, just general investigation of the property, 17 days. And then, so this investigation, part of the changeover from the old form is that these are split into different, or parsed out into different aspects of buyer investigations, where the buyer has 17 days for different things. And it's good in some respects because sometimes you don't know about leased items. That's typically solar, for example. Or you might not get HOA docs on time. But basically, this whole section is kind of the buyer investigation and inspection contingency. And now if this is going to be waived, then you have to check this CR box and do a separate contingency removal form. Just keep that in mind. And if the buyer needs to sell their property before they can afford this purchase, they need to do this COP form. You'll check that box. These are all special circumstances, though. All right, possession. It makes a mention of vacant units because, and then units delivered vacant. This is one of the differences between this and a normal RPA, is it addresses there may be units that aren't vacant. And this basically just says when the buyer is going to take possession, which is the day of recording and upon notice from escrow. All right, and then the seller has 7 days to deliver disclosures. And these are just time frames for the seller to be compliant, to pay for HOA docs, install smoke alarm, water heater bracing, etc. And we move on. Are there certain items that, now real property is anything affixed to the property. And affixed is, I mean, like built in, attached. Are there items that may be up for dispute or items that don't want to be included? You'd indicate those there. So sometimes a seller is saying, hey, I'm taking something out. Make sure you put that in the offer to exclude it. Or you might say, there's something that looks like you might take it out, but I want you to leave it. So you'll put that right there. All right, then we come down to allocation of costs. These are closing costs. Seller's going to pay for the natural hazard disclosure. I have fastnhd.com there. There's a drop-down menu, but you can just type in a company. And I check seller all the way down. So you get the seller pay for a termite report, for example. You write in termite report. Or if there's some other, let's say there's something of concern, you can have a report, any report you can think of. I mean, we're talking roof or septic or, I mean, whatever report you want the seller to pay for, you can put in here. Or you can put I actually don't like that they put report there. And if it's termite, you can't select the company here like you used to, which is a bit frustrating. But at any rate, make sure to write in whatever you want the seller to pay for. And then we have, again, smoke alarm, CO2 detectors, and CO detectors. They'd left the 2 off. Water heater bracing, seller to pay for that. Government required point of sale inspections reports, seller. Corrective actions, seller. Fire extinguishers, sprinklers, hoses, seller. If applicable. So if some of these items aren't applicable, you don't need to check anything. If you're unsure, just check seller just to protect yourself. Now, of course, this is in Southern California, the seller pays everything. Northern California, it's a little bit different. I wrote this kind of with the Southern California approach just because it's more uniform, whereas in Northern California, it varies county by county. Even sometimes it varies within the county if you're on one end of the county versus the other. It's more uniform down here in Southern California. Escrow fees. So this is a PDF, but if I checked this, this is what I'd do if I was filling this out. Each pay their own fees. Escrow fees, each pay their own. Escrow holder, write the name in there. Owner's title, seller to pay, and I'd write it in here. In Southern California, you check each pay their own. You write seller's choice, or you write your preferred company or seller's choice, because the seller chooses in SoCal. Same with here. You check seller for the owner's title insurance policy and write seller's choice. I typically write the company I want to use or seller's choice, because I don't want someone just saying, I don't want to say seller's choice and maybe that agent's not experienced and they might just close their eyes and just randomly point at one on a Yelp search, and it might be a company that does a terrible job. So at least I know the company I want to use, but knowing that it's going to likely be seller's choice in Southern California, I leave the option for seller's choice in addition to proposing my company. Now, of course, in Northern California, escrow fees, it's different. But in Southern California, each pay their own. Which is actually kind of the same as both. It's weird they have this verbiage here, but that's a whole different video. The buyer pays for their own lender title policy if they're getting a mortgage. Seller to pay county transfer, seller to pay city transfer. There's not always one. That's if applicable. Not all cities have a transfer tax or fees. And so you could leave it blank if you know the city doesn't. But I put seller because in SoCal, that's who would be paying this. Seller to pay for HOA disclosure prep, HOA transfer fees in Southern California, the seller. You know, this should be the seller no matter what in general, because even if this deal falls apart with buyer number one, then the sellers, I think the seller should pay HOA transfer fees without digressing too much here. If there are private transfer fees, by default, the seller pays. This is good. Just leave it alone. Installation of safety features, seller for sure. They need to be doing work on the property. The buyers shouldn't be doing work on the seller's property. And then they have just kind of auxiliary line here, and home warranty plan. I think it should be buyer's choice, since the buyer's the one that's going to be dealing with customer service. So you can check seller, cost not to exceed. Let's throw some number out there, $1,200, issued by. I use First American. Not that I think their customer service is superior to others, but because I like their online ordering platform, because I can go to First American's home warranty, their home warranty website, and I can just run a search and it'll tell me how much that home warranty policy would cost. So I can write a number in here, and I'll write First American, or I'll write buyer's choice. Now this is additional tenancy documents. Check these boxes if there are tenants. You want this. A tenant estoppel certificate basically is just a summary of what the tenant's paying, the terms of the lease or the arrangement with the tenant. Other terms, you can write in whatever you want right here. And this is some space if you need to incorporate some other forms, like probate. This is a probate agreement, purchase addendum. There's so many. You'll just read through, and if it applies, check the box and add the form. If it applies to your unique transaction. And we will continue on. All right, now here's that sea of text that I mentioned before that corresponds with all those letter line items in that matrix format up top. So this just explains everything. I mean, there are all sorts of questions. You know, what happens if the EMD isn't delivered? What happens if the contingencies aren't removed? What happens? And this is kind of like if you want to deep dive any of those terms above, this is where you go. I mean, there's a whole section here. Seller remaining in possession for close of escrow, condition of property on closing because maybe you did a final walkthrough and the place is a complete mess, and you go, wait, what recourse do I have to make the seller responsible for the property condition? Well, here it is. So that's what this is for. I mean, as a broker, I constantly refer back to this, and I'm going through and looking at each particular word to see what the implications are before I render my own opinion or strategize with one of my agents on a game plan on what we can do to remedy the situation. Appraisal, investigation of property. This is about HOA docs. I mean, this is all boilerplate text. Lease items, allocation of costs, point of sale requirements. If you have questions on any of this, go ahead and leave a comment, and I'll be happy to answer. You know, a lot of these are advisories that relate to disclosures that'll come up later too. A lot of disclosures and advisories. Yeah, water conserving plumbing devices. There's a form, the WCMD, water conserving plumbing fixtures, that will address this when disclosures are done. Tenancy related disclosures, more disclosures. This is all about, look at this, buyer investigation. Just look at this ocean of text. Time periods. I mean, what happens if time periods aren't being honored per what we did up above? This is where you go. So you get the idea. I'll scroll through this. Yeah, I mean, broker compensation. What's the scope of duty? I mean, sometimes there are disputes and someone makes an allegation at an agent, and the agent can say, well, what is my scope of duty? Because you signed a form that outlined the scope of the agent's duty. This is here to protect everyone involved. My gosh, there's a lot here. Okay. Liquidated damages. Buyer's going to initial. This is where the deposit gets retained if the buyer defaults. Meaning all contingencies are removed and the buyer doesn't close. The buyer can't close. Now, if there are contingencies, almost always that buyer's deposit's safe. And it shall be no more than 3%. Sometimes people make these unusually high earnest money deposits. It doesn't matter, because if the seller can only keep 3%, it's irrelevant. It's just foolish to do that. Mediation, the parties agree to go to mediation. If there's a dispute, this section means that if mediation fails, it goes to arbitration. And this is all to avoid going to litigation or going to court. So you want to have mediation as the first course of action. If you initial in here, it adds arbitration as the secondary measure if mediation fails. Expiration of offer, entity buyers. Remember how I said if it's an LLC or corporation or trust, you'll check this box. You'll make sure that the RCSE, representative capacity seller signature disclosure, is involved. Buyer's going to sign. Agents are going to sign down here. Buyer investigation advisory, because we can't end without there being another advisory. It just wouldn't feel right. 2-page form. Fair Appraisal Act addendum. California Consumer Privacy Act advisory disclosure and notice. And we're done. If you have any questions, please leave a comment. Thank you for watching.